Unit 2 Special Features of Audit of Non-Banking Financial Companies. We'll go through just the key features of this chapter. A company incorporated under the Companies Act and desirous of commencing business of NBFC, as defined under Section 45 IA of RBI Act 1934, can apply to the Reserve Bank of India in prescribed form along with necessary documents for registration. The RBI issues certificate of registration after satisfying itself that the conditions as enumerated in Section 45 IA of the RBI Act 1934 are satisfied. A non-banking company is defined under RBI Act as a financial institution which is a company, a non-banking institution which is a company and which has its principal business the receiving of deposits under any scheme or arrangement or in any other manner or lending in any manner. Such other non-banking institution or class of such institutions as the bank may, with the previous approval of central government and by notification in the official gazette, specify. Further, in order to identify a particular company as NBFC, it will consider both assets and income pattern as evidence from the last audited balance sheet of the company to decide its principal business. The company will be treated as NBFC when a company's financial assets constitute more than 50% of the total assets netted off by intangible assets, and income from financial assets constitute more than 50% of the gross income. A company which fulfills both these criteria shall qualify as an NBFC and would require to be registered as NBFC by RBI. RBI has issued directions to NBFCs on acceptance of public deposits, prudential norms like capital adequacy, income recognition, asset classification, provision for bad and doubtful debts, risk exposure norms and other measures to monitor the financial solvency and reporting by NBFCs. RBI has introduced scale-based regulations for NBFCs based on 4 layers that are defined based on their size, activity and perceived riskiness. The 4 layers are base layer, middle layer, upper layer and top layer. NBFCs lend like banks. However, such entities cannot accept demand deposits, although some can accept term deposits. These also do not form part of payment and settlement system. DICGC cover is not available to depositors of NBFCs. No minimum exposure to priority sector is required by NBFC. Every applicable NBFC shall, after taking into account the time lag between an account becoming non-performing, its recognition as such, the realization of the security and the erosion over time in the value of security charged, make provision against substandard assets, doubtful assets and loss assets in accordance with prescribed norms. Audit procedures for NBFCs have to be tailored in accordance of nature of business of NBFC and regulatory directions. Besides issuing a report in accordance with the requirements of Section 143(3) of the Companies Act 2013 and covering matters specified under CARO 2020, statutory auditor of NBFC is also required to submit an additional report to Board of Directors of the company. The Reserve Bank of India has issued NBFC Auditor's Report, Reserve Bank Directions 2016. The directions to auditor of every non-banking financial company in this regard. Under these directions, the auditor of an NBFC has to submit an additional report to the Board of Directors of the company covering matters specified in these directions. We will cover test your knowledge in next video.